Is this thing on or how's it going? Well, hello, and how's it going? Well, how's it going?
Hello, and how's it going? Hello, how's it going?
Well, how's it going? Well, how's it going?
Well, no, sorry. Well, how's it going?
Well, how's it going? I'm here with you. I looked at you and I started
I was
laughing.
going to say good.
Well, how's it going? I'm here with Kristian and Madison, and we're back.
We are back.
The back, baby. My phone vibrated.
Try not to laugh. Well, how's it going? I'm not Ben. I'm Kristian. I'm doing the intro.
That was terrible.
That was so bad. I was so bad. That's why I don't do the intros.
At
but
least Maddie, she had a go at it.
No, we're back for part 2 with our property valuer friend Niall. So we wanted this to feel like one continuous flowing episode. So we thought we'd mix it up by doing a quick intro. And I don't know, we thought maybe I'll
Keep it
give
going.
a go this time.
Yeah.
Now we know Future Reference don't let Kristian do the intros anymore.
Yes, he's banned.
Yeah, I've been banned from that. That's Ben's game, not mine. Anyway, to jump back in. So last thing we spoke about on our last episode, which the viewers will be looking at, different episodes, was obviously the more intricate details of the methodology, right?
Yep.
I want to talk now more about sort of the wider lens view of things. In particular, number one, in your case, what are the requirements to actually become a valuer? The qualifications you need, how do you get there? And then number two, what's the risk to you? Because we just spoke about off-camera compliance, right? Particularly in my case, compliance is not fun as a broker. But in your case, I'm sure there is too, right? At what point are you held legally liable for things you say and do? And, how does that work? Sorry, long-winded question, but
No, that's all
requirements,
right.
qualifications, risk.
I'll get back to the qualifications, but I think in answer to your question about how much risk am I facing personally as a valuer, I don't think it's different for any of us. Most professions, if you're misleading, if you're negligent, and if your client suffers a loss as a result of relying on your advice, it
You
doesn't
end up
matter
on
what it
a
is.
Reddit forum.
I've done court cases with real estate agents, lawyers, builders, developers, surveyors. I had a
Wow.
job where a surveyor was like, meters out on a survey. Not centimeters, meters out
Meters?
on a standard residential property.
How are you meter?
I
Okay, let's
know.
not go down that rabbit hole.
But you know what I mean? So I think really, in terms of risk these days, I've spoken to a lot of people in property-related fields.
Mm.
It's not just the valuers these days that's in the firing line. I think everybody's, financial planners, for example, they're saying they're really in the firing line. I think anybody so I'm not allowed to give advice
Mhm.
as a valuer.
Mhm.
It's not part of my qualifications.
Correct.
Financial planner can give advice. I'm not allowed to, which is great because I don't want to.
Yeah.
I just want to sit there and say, right, here's what the property's worth.
I'm not your therapist. Fuck off. Don't talk to me.
Here's the things you should be aware of, that are prudent to you.
Do you think I should buy this? Or I love that question. Yeah.
No, what do you
If this
think?
was you, would
Would you
buy
buy
it?
it? What do you
Yeah.
think I should do?
You were talking before about some misconceptions of our jobs, right?
Yeah.
One of the common misconceptions of valuers is you walk into a property and they will ask you, so what's it worth?
Yeah.
And you'll say, I don't know. I've got to go and check it ourselves. Yeah, but you must have some idea. Actually, I know you don't believe this, but I've done this for 25 years and it's been trained out of me to walk in with an opinion. If I walk in with an opinion, I'm not doing my job.
You're naturally biased then, right?
You're naturally biased, correct. You shouldn't take the job.
Yeah.
And sometimes people who work in their little patch get to whatever in their little patch and they think they know everything. That's one of the beauties of having a bigger geographical area.
Yeah.
I'm always scared I'm going to be wrong. So I'm always over diligent and I'll never have enough sales. And I'm always spending way too much time on every report because I want to make sure I'm right.
I think that's an important note to make. If you're a property valuer, leave your arrogance at the door.
Yeah.
The sooner you accept that you actually don't know everything, the better you'll be at your
The same
job.
with any profession. I mean, I think in property, it's very frustrating for your mum and dad buyers or young kids or whatever, like it's a lot of money.
Yeah.
And it's a big stress. It's your biggest financial decision. And they don't really understand the process. And whether they're talking to a real estate agent, a broker, a property manager, a surveyor, an architect, whatever, they don't really understand how much is involved in each of our professions.
And sometimes they're not getting the same story from every person as well.
And some people in our professions are not good at their job.
Yeah.
Valuers are not all good at their job. This is why we end up with disputes.
Absolutely. There we go.
I mean, you can have a difference of opinions based on fact.
Yeah.
But the minute you're not having enough facts to base your opinion on, that's where you've got a problem.
Yeah.
So in terms of your, I guess, personal liability, it really just bubbles down to as long as you can back up the value that you put on a property and you can prove it and you can prove your methodology and your thought process behind it, you're pretty much more or less covered.
Yeah, I've been doing this for 25 years. I've never had a solicitor's letter. I've never been close to anything. I am particularly diligent and meticulous, and that's why I'm not rich. I take way too long over every job. But it's also risk profile. I don't do mortgage. Your biggest chance of getting sued as a valuer is doing mortgage jobs.
Yep.
Or development jobs. And if you do a mortgage job on a development, that is your absolutely biggest risk.
Yep.
Because the problem with developments, which people don't understand, is when you're trying to work out what the end value of this new development is going to be, 22 bedroom units with a penthouse or whatever, where are your sales for newly completed units? They don't appear in RP data for 12 months.
Correct.
Right? Because the developers hide them because they don't want you to know what they're getting. And it takes time to filter through. I get all that sort of stuff too. But certainly back in the day, they were very good at like delaying.
Oh, it's still the
settlements.
case.
Yeah.
And then 12 months later, they're not really reliable anyway
That's right.
because the market's changed.
Because they don't want people to know what they're actually selling them for.
Yeah.
Because quite often they'll sell quite a few just to get some cash flow going at numbers below what they're advertising.
Yeah.
So yeah, I think that's more of the issue too, is why are you doing the valuation is your biggest risk. The number one question I always ask people, apart from the property address, what's the purpose of the valuation?
Yep.
Because that is my biggest risk profile when I'm going to do fee quotes. Why do you want it? If it's for a risky purpose, I don't want to do it. But say with you asked about bank valuations, with mortgages, my professional indemnity insurance is about $7,000 or $8,000 a year, right?
Yeah.
If I do mortgages, it's 50. Wow.
Whoa.
Does that give you for one person? Does that give you an idea of the risk profile of doing mortgage
That's
valuations?
insane.
So again, this is the risk profile, you see.
And I thought my fucking professional indemnity was bad. I'm never going to complain again.
You will.
But you think well, I guess you do a lot of transactions. So like say with real estate, you're only selling X amount of properties per year, right?
Yeah.
So I think you're doing about 50 or something was last time I checked.
Roughly,
right?
yep.
Which is really good. That's a really good result, actually.
you.
Honestly, you and Madison, you got some really big results. Because it's one of the ways I check out real estate agents to see, the credibility.
Realestate.com does us some favors sometimes.
No,
Obviously, they flip.
Niall, I want you to remember who brought you on the podcast. It wasn't Ben. Very careful who you're
I
gassing
can't
up.
verify your data. But what I was getting at in terms of PI, you're responsible for 50 jobs and $1 million on average each.
Yep.
That was about your average on real estate.
Yeah. He's done his research.
He's done his homework.
Give me numbers. I can't remember anyone's name. Whereas with broking, you're doing more than that. You're doing, I don't know what, 3 jobs a week, 4 jobs a week?
Honestly, it varies so heavily.
But on average, you're probably doing per year a few hundred.
Most average brokers will generally settle somewhere between 10 and 20 mil a year.
Yeah.
In lending.
Okay.
The higher caliber brokers will generally, some of them settle closer to 50.
Well, that's not too bad. Okay. Because in this case, we're looking 50 times $1 million average. That's 50 mil.
Yeah.
He's got to insure himself for. Me, because I'm in court work now, it's a lot lower. But back in the days when you do mortgage valuations, and these guys are doing 5 or 10 a day.
Yeah.
Same with the government stuff, right? If you're doing 5 or 10 a day in Sydney, average price $1 million plus, you got to insure yourself personally for a couple of billion.
It's insanity.
Do you know? Like you
Never
do
thought
20,
of it
30
that way.
jobs a week. That's like 30 mil a week times 48 weeks a year.
Does it even make it feasible at that point? Like,
Well,
if
let's
you
look at the PI. That'll tell you.
Well, I guess that also partially explains why they say bank valuations tend to be a bit more conservative leaning, because they don't want to get screwed if they're taking on that level of risk, like you say.
In my experience, it's been 15 years.
Yeah.
The banks were always pushing us to go higher.
Yeah.
But obviously,
Wow, that's
the value,
interesting.
well, they're pushing because the valuers don't want to go higher, and I kind of
probably
understand
fair
why.
enough. Yeah.
But qualifications. So
yes, the qualifications. Yes, thank you.
Yeah.
So look, to be a valuer, you have to go to uni now, basically.
really,
So back in the day when I started, you went to TAFE and you could do residential.
Yep.
Then if you wanted to do commercial, you had to go to postgrad or do a full uni degree as well.
I didn't know that. See, there you go. I did not know there was university degrees for property valuation.
It's not out of a shoebox like our licenses.
No.
Yeah, well, so you got to do a 4-year degree.
If we're comparing, I feel inferior.
It's just different because a lot of the stuff we do is technical, right?
It's a shit joke.
A lot of the stuff you're doing is learning on a job.
Yeah.
Right? And we have to have a lot of assumed knowledge. It's a bit like a pharmacist or something who's doing technical stuff.
Yeah.
You got to have a certain amount of knowledge so that no, I really can't give that person like heart medication. A bit like, you need to know some basic things about construction.
That guy's
timelines.
diabetic.
You're right.
He doesn't need heart medication.
We can get things really badly wrong.
Yeah.
You know what I mean? So we have to be trained to a certain extent to a level that we identify the risk as being like, put your hand up, get your boss, or refuse the job.
Yeah.
So you got to have that kind of level of knowledge to start with. But yeah, it's a full degree.
So base level, if you just want to do resi. So resi,
I think you've still got to do like a full degree.
really?
Well, I don't think TAFE will cut it anymore.
So when you started, it was just TAFE, but now it's a full
yeah,
degree.
that's right. Yeah. And can I tell you, I've done 3 degrees now, postgraduate, TAFE. I love TAFE. TAFE was awesome.
Yeah.
I went for my first job interview in valuation, and the person asking me the questions of the interview said, right, what's this property made? What's this building made of? I walked up, knock. I go, well, it's either brick or it's like concrete frame. Says, right, you got the job. I go, what do you mean? He
That's
goes,
simple.
every single person we've asked that question was from uni and they had no idea. Because on TAFE, they make you go on work sites.
Yeah.
We went to farms. Like, I like TAFE in terms of it's a hands-on.
It's a bit more
Valuation
of
is
a-
not an office job.
Yeah.
No, it's not.
Like-
You're on site. If you're
Yeah,
doing
I'm on
full
site, that's
valuation
right.
inspections, like and the things like building materials are important, especially like if a property has asbestos. That is a massive factor. You need to
Yeah.
be able to, most valuers, I've seen it on bank valuations. They'll flag it. If it's an older property built in the 60s, they'll go high risk of there
Yeah,
being
fair enough.
asbestos.
Yeah.
Even if they can't verify it, they'll note it on there.
Yeah, that's right.
And
yeah.
you need to have that practical experience to know, this looks like it's riddled with asbestos, right? 'Cause
Yeah.
that's important. It's
Yeah.
relevant.
And it's a bit technical. So it's a bit like a town planner. It's a bit like a surveyor.
Yeah.
There's quite a lot of necessary knowledge before you can start doing the basic job.
Mm-hmm.
So with qualifications, basically, I think it's just uni now. And but if you want to go and do commercial, there is different policies by the banks and by government what they will expect, and also with court work, there's all these sort of requirements, and they expect the amount of knowledge you have to have and experience doing whatever. So to get to where I'm doing or doing any property type anywhere, you've just got to get your experience up.
Yeah,
And,
you're doing it.
I've done 10,000 inspections. I've done 1,000 court reports.
Wow.
That's a man who's seen
The
a lot of
stats.
properties.
I've seen a lot of crazy things.
I can only imagine some of the things you've seen in some of those court disputes.
Smoking
And I- you know what,
houses,
actually-
meth houses. Oh, man.
Up
Imagine-
the value on those, don't you?
could you imagine you're a value and you get caught out your house and it's just a meth den? Like, what do you even do at that
I
point?
couldn't, but I've definitely been in some weird situations where you show up at rental properties that you're valuing and, appraising in our terms, and you think that shouldn't be there. That shouldn't be allowed to be doing that.
Yeah, rental properties are always interesting because they don't care.
Yeah.
Right? You're just going through, especially as a value.
Yeah.
And I've been through ones where practicing pole dancing or doing whatever, and it's just.
I had a story last week recently about renters and look like through the window they were almost like cooking something strange. Pipes going through the living room. And it's crazy shit. But obviously in your case, as long as you just want to make sure you're covered. So I guess to circle back to the original question I asked, from a risk point of view, the chances of you getting sued, as long as you're smart and selective about the business you take on, pretty slim.
It's like all of our professions. It depends if you're smart about risk assessment yourself.
Yeah.
The problem is if you're an employee, you don't get a lot of choice.
Yeah.
They tell you what to do.
But in that case, though, your employer would also wear a lot of that risk. You're not
Assuming
wearing
they're
that
still in
liability.
business in 12 months.
Well.
Because I've seen in one of the big 4 companies in the city, they did all these jobs on, I forget what it was. It was, I think, development stuff and everything, really hardcore stuff. And they got sued a couple of times. They lost their insurance cover and they just folded that company. It was one of the big 4 guys.
Started a new one.
Started a new one. All these valuers had no PI.
We're jumping back in again. We had another technical failure, guys. We're really sorry. The camera just didn't feel like camera-ing today.
Kristian left it on.
No,
We're
it
not
wasn't.
going to leave that part out.
We don't know that it was me. I wasn't the last one.
Last time we recorded, you locked yourself out of your unit before, and this time you left the camera on. So
Well, the last time I used the camera wasn't for this recording. So
Okay.
it wasn't for the podcast. I used it for other ventures.
The response is, to the best of my recollection.
yeah.
Don't give me that look. It was for footballing purposes, Benjamin.
Yeah.
Anyway, we sort of were wrapping up talking about the personal liability piece. I think we can leave that. I think we've more well and truly covered that. The short recap is that as long as Niall is not an idiot, he's pretty much covered.
Or any of us, honestly.
You only have to talk to him for 5 minutes to realize you would be very good at what you do, and it sounds like you'd be quite meticulous at it, and it'd be the right person to speak to. That's for sure.
Try my best.
if you're going to court for a dispute and he's the person you want him on the stand,
It's just a personality thing for court. You've just got to be honest.
Yeah.
If you don't know, just say you don't know.
Yeah.
That should
You know
be the
what I
case with everything. I make it a point. I will never ever say to give someone an answer unless I'm 100% confident on it.
Yeah.
And I've had people get the shit to me saying you should know that. I'm like, well, I don't. If you think I do, I
just our day and age though, people just expect information at hand, then there, and when they want it.
Yeah.
And
The problem
if
is they
don't get the
rely
answer
on it,
they
and it's
want-
not correct.
Yes,
AI.
which is wrong. Yeah, exactly right.
I've
We
had to
have
explain to
such a
people.
bad-
I had someone say it to me not long ago. They were like, "Oh, well, I actually put it into ChatGPT and it said this," and I was like, "Well, it's wrong."
Are we really going to have this
And they're like,
discussion?
Yeah, it's
I had a good
just-
one the other day actually with an appraisal, because these days you can put a property address in and say find me 3 comparables and yada yada. It'll spit something out and it'll give you some of a figure. Look, sometimes they're not that far off, but they take into consideration none of the real things that we probably should be looking at. And someone questioned me on it, and I was probably about 150 grand under the ChatGPT level. And I said, well, without being rude, is ChatGPT going to sell it? Like, there's no data there to back that up. It's pulled out 3 comparables that I don't have in a report of 9 for you. Does that not tell you? I don't have one of them.
Yeah.
Does that not tell you that they're not comparables? It's just
and this
It's
is
a bit of an
rely-
art, isn't it?
It
It's a bit
is.
of an art.
We
Well,
rely
I've tried
way
to
too
explain
much
to
on
people.
AI.
Well, I've had to explain to people before that ChatGPT is not actually giving you that information. It is scraping data from the internet.
Yeah.
Now, if everything that we read on the internet was accurate, happy days.
Oh,
I've been taught since I was
half of
about
us, we
6
probably
years
wouldn't have
old. that-
jobs.
I've been taught from since I was a kid that the internet is not to be trusted, that most of it is bullshit. So
Yep.
therefore, if you're using a tool that is scraping data from the internet, of course it's going to be wrong sometimes.
Imagine talking to your 6-year-old self and say that everyone now is going to rely on a mysterious person that they speak online to.
Oh, the worst one.
It's like Siri.
The worst one was I remember they used to don't talk to strangers on the internet and don't get
Yeah.
into strange cars. Now I order someone to drive me around on the internet. Uber is a brilliant thing.
Oh, gosh.
Give an example of how wrong you go with ChatGPT, AI, or whatever. Lawrence Hargrave Drive or something, for example. They don't know that all these models don't know that one side of the road is completely different to the other side of the road.
100%. Exactly right.
Because from their point of view, it's 10 meters apart.
Yep. Which is
Same,
the high
same.
side, which is the low side. Oh, no, there's an easement through the backyard. Didn't know about that. What do you mean?
ChatGPT didn't say anything about an easement, so
Yeah.
obviously it's Anywho, to move on, one of the other questions I wanted to ask you, this is one we generally do ask our guests. Now, when I ask you the question, I'm going to preface it. You don't need to give us exact figures for this one.
Okay.
We just want to know how your fees are structured. So, in the sense of, again, we've spoken about this plenty of times, we work on percentage basis.
Yep.
We get paid a commission, and it's a percentage. For me, a percentage of the loan. For him, it's a percentage of the sale price of the property.
Yep.
In your case, how do you get paid? So obviously, you invoice whoever's contracting you directly.
Yep.
I'm assuming. And obviously, is it a percentage basis? Is it a flat fee? How does it work?
So look, for me, basically two things. One, why do you want the report?
Mhm.
That's the risk. And number two, what is the property? That's the other risk. So one is a risk, and one is how much time is it going to take?
Yep.
You got to convert a church in Coaldale where there's 10 properties in that part of Coaldale or something, and you want it for something really complicated like a dispute or whatever. Oh, that's a nightmare. Do you know what I mean?
It's going to take a lot of.
You want to have a stamp duty of capital gains in a 1960s block in Corrimal or whatever, where there's another 300 1960s blocks the same. Easy.
It's going to.
So look, for me, it's two things. One is the risk is the number one thing.
Yeah.
So what is the risk that it can go wrong and I get sued, as you pointed out?
Mhm.
So I try to avoid the ones like that. But look, sometimes you'll take on something riskier and you just price it.
Yeah.
Yeah.
And you'll charge more. But really, a lot of it comes down to identifying how difficult is the job going to be.
Yep.
Mhm.
You can get caught out. Like sometimes you go look up a property and you go, oh, okay, cool. It's a commercial property. And then you get there and there's 10 different tenancies. Like, oh,
Or it's like a mixed use.
Why did I take this?
well, it's more the question of the multiple tenancies is the issue. Do you know what I mean? Like you can have a mixed use building as long as it's two tenants. But now the fees structure comes down to basically how diligent do they need the report? If it's for stamp duty capital gains, it's a fairly simple report. You just want to satisfy the government. And I say, but look, I've done 10,000, never been rejected. I play the game. You can wiggle a little bit, but you've just got to go and do it properly. And it's fairly straightforward.
Yeah, absolutely.
When you're doing something complicated, it's just a time investment.
Yeah.
So especially if it's for a dispute or something where nobody trusts anybody and they're all assuming that everyone's lying to them,
Mhm.
they're the ones you want to put more time into.
Mhm.
Or it's an easement or an encroachment with two neighbours who hate each other or whatever it is. Do you know what I mean?
I like
So,
that
yeah.
setup though, because really a lot of the time, more my industry and maybe not as much yours. Sometimes it could be a really easy job and you still get paid the same amount of time, or it took you 12 months to sell the property. It's
the same.
still the
It's the
same,
same with me. I write a loan. I get paid. It's incentivized, right?
Yeah.
So a loan could be a lot smaller. I get paid a lot less, but it's the same amount of work that for a loan that's triple the size that I
Yeah.
get paid more for. So in your case, it's more tailored. So you don't really have a set fee based on a set valuation type. It's
That's it. So I'm doing sort of
very tailored.
Yeah, that's right. I'm not
yeah.
doing general jobs.
Yeah.
I'm really focusing on B2B work.
Mhm.
I'm on this partly to start doing a bit more B2C, especially down here,
Yeah.
and do some stand duties, capital gains, whatever. And yes, you can do a fee structure for them, but you just got to be a bit mindful that people either don't know really what their property is, or they won't tell you the truth.
Yeah.
And they won't tell you about the 3 occupants or there's, whatever it is.
Yeah.
Because they want to get a cheap price on the quote.
100%.
Absolutely. Now, it's also occurred to me, we didn't actually even mention in our first episode, we introduced who you were. We didn't actually mention your business name so people can look you up.
Yes.
We will link it obviously in all our socials and everything,
Perfect.
but NDM Valuations is
Correct.
the
Yeah,
name
that's
of the
right.
game, right? And you're a local-based valuer.
Yep.
You do a lot of work in Wollongong, a lot of work in Sydney,
Yeah.
and you work completely for yourself. You're fully
Correct.
independent.
Yeah.
So NDM Valuations, I'm just going to make sure we have that on record that we did in fact cover the man's business. It just occurred to me. that we didn't mention
I should have shouted that out at the start.
No,
Yeah.
that's all right.
it just
My
just
name is,
occurred
I
to
think,
me.
if you pump me into Google, my name comes up.
Yeah.
Number one.
We were talking about he's got a very strong presence on LinkedIn. So if you're a LinkedIn user,
I'll have
Niall's
to follow you
everywhere.
on
You'll
LinkedIn.
be able to find him very easily.
I've invited you both already.
Oh, have you?
I I don't even
I
have
haven't
LinkedIn.
checked it
I need
in a
to make
while.
a profile. I don't have
I need
LinkedIn.
to just use it more. Like I find.
I think you got 40 followers. You got about 500.
Yeah, I just
586.
confirm
That'd be
everything.
my. Used to have a profile. I thought I deactivated it. Apparently not.
I couldn't find one for Madison.
No, I don't think she's made one.
Yeah,
And we were intending to make one for the podcast as well, so we could share some stuff.
We've been
on that
meaning
too.
to, so we'll need to at some point.
Yes.
Will you help me out with the Facebook and Insta? I'll help you out with LinkedIn.
Oh, I like
that sounds
it.
like
We're on.
that's quick pro quo. Right there.
I'm good at
Scratch
that
my
bit.
back,
You're good at the other
scratch yours. So the last thing I want us to talk about today, it's not so much to do with valuations itself. This is a more general sort of topic that we wanted to cover on the podcast, and we thought we'd love to have your input into the discussion because it's something you specifically do. The proposed changes that they're talking about for capital gains.
Yeah.
So first and foremost, for people who don't know, I think we probably should go through what the changes actually are. I'd be more than happy to give that to you. I'm sure that's something you've been following very closely.
Yeah. No, I'm not an accountant, so this is not financial advice.
Absolutely. We're just talking about the laws, the tax laws.
So what the federal government has proposed currently, going to be in the budget May 1st, I think, going to be introduced July 1st next year. So start of the next financial year.
Is it confirmed? Have they officially confirmed it's
No, it has to go through the budget. It has to get approved. But given there's no opposition currently, it's quite likely. I mean, these things generally don't go through. But there's nobody to stop it at the moment.
Yeah.
So look, it's a really big issue in that the capital gains tax deduction currently is 50%. So if you buy shares, managed trust, property, you hold them for 12 months minimum, you get a 50% discount. So let's say you buy something for $1 million, you sell it for $2 million, and you've held it for 12 months. You only actually pay capital gains on half of that.
Yeah.
So if your profit is $1 million,
they're
and that goes straight on top of your personal income tax.
Yeah.
Which hurts.
Yes.
What they're proposing doing is changing it to 25%. So therefore,
it was 30.
I think they might have. You're right. Could be right.
Yeah,
so it's either going to be
30%.
700,000 or 750,000 straight on top of your income if you make that $1 million capital gain. So the problem, as I see it, is not so much affecting prices because there's a property shortage. The housing shortage, there's not enough houses.
Yeah.
You know yourself, right? So I think the biggest unfortunate from this whole thing, if it goes through, will be a lot of investors will sell. Like we saw in Victoria when they put the extra state tax in. Investors are sensitive because they're trying to get a return.
Exactly right.
And if you're penalising them versus putting their money to manage shares and all the other stuff, especially with the way insurance is going up, council rates are going up.
The risk associated with having
it's getting harder
these days is, a lot of landlords just throw the towel in and say, I'll get out of the market.
That's right. So I think the concern is
my money.
The poor tenants with a 1% vacancy across most of Australia are going to face two problems. One, you see these things in Sydney with 100 people lining up for an inspection and 20 applications in the first weekend. But the other problem will be on rental prices.
Yep.
So the poor tenants who are trying to get ahead and get a deposit to start getting the market or whatever, they're going to be unfortunately the ones most affected. Even though the government's trying to penalise the investors, who they're actually going to hurt is probably the tenants.
The supply is going to reduce, which you're right. It's only going to drive the prices
it
up.
can't get worse.
Yeah, I know. We're already quite short.
I mean, sorry, it's ridiculous. Yeah,
it is, and I think people love to jump on the bandwagon of bashing landlords. I think it's a very, very common conversation topic. We've done it before too on here because there are some people out there who just
if you've got 50 properties,
scum of the earth, absolutely. But the reality is, people need properties to rent. Not everybody wants to buy. Some people want to rent.
Exactly right.
Look, nobody wants to rent. We all like to live for free, obviously, but some people, for whatever reason,
in a position to buy something.
They either have to, or some people want to too. Some people don't want to get tied up. If you're moving around for work every 12 months, you don't want to buy. You'd rather just rent wherever you live. And
that's right.
At the end of the day, as much as we love to punish, it's great to punish the investors and make them pay more tax and brilliant. All good. What are the flow-on effects from that? And this is obviously what people are failing to see with this is, I think our tax system probably is due for a bit of an overhaul. There's a lot of areas of the tax system that is so flawed. But this is, given we're in the midst of a housing crisis and a housing shortage right now, maybe not the time for this particular overhaul, I think.
I think it's like the 5% deposit. It had the exact opposite effect of what they hoped for. It's actually made the bottom end of the market go up more than the top end of the market.
Right.
It did nothing.
So who got penalised? The first-time buyers.
Absolutely. All it's done is made that affordable end of the market. I say affordable with quotation marks.
But they just keep seeing, they're fairly obvious to all of us.
Yeah.
Right? I'm sure they'd have people working there that know what they're doing.
Oh, they'd have people.
I don't know why they keep making these policies that keep hurting the tenants and the lower end first-time buyers.
I think the problem is the people who are making these decisions, a property market that keeps going up and skyrocketing benefits most of them because most of them have property portfolios. That's the reality. That's not
conflict of interest.
How many times do we say we saw it happen in the US or something and we're like 5 or 10 years behind? Like you just said, we saw it happen in Melbourne. Almost an identical thing. And that's in the same country. Could we not look at that and say, really, it's probably going to have the same carry-on effect? Exactly.
Yeah, why don't we
right.
get the housing crisis under control first, and then we can talk about overhauling this?
Well, really,
You know,
like, where's that money
it's-
going? The extra 25%, for example, or 20% if it was 30. It's
That's
only
right.
coming back to the government. Like, maybe if there was an incentive there to say, okay, well, not 80% of the funds we raise are then going to go to public housing, or they're
Yeah.
going to go to creating
affordable
more.
housing programs
Exactly
and
right.
things like that.
No,
and
it's just going to go back into the government to
recoup
be
it.
spent on
spent
something
in
else. That's right.
stupid places. Yeah.
I think the other problem is if once you start taking away demand from investors and all these sort of things, you target the overseas investors or this and that, whatever. I know there's a good reason behind it, but what ends up happening is you reduce the demand for new buildings.
Yes.
Yeah.
Because the only people who want new buildings are overseas investors, local investors. They want their depreciation or whatever. So you
100%.
start targeting those people and making the incentive less for them, then that's why we don't
They're
see as
gone.
many. That's why we have a housing shortage.
Exactly.
Exactly
And this
right.
is the thing. And again, if I was confident they were going to have a wise use of those funds, something that was going to help alleviate the housing crisis, then maybe I'd look at this a bit closely. But given there's probably not, and even if there was, this is still not you're ripping the rug out from a market that's already in crisis mode.
Where's the plan?
You know,
Yeah,
it's
They seem to
exactly
continually keep ending up hurting the people who need the most help.
100%.
absolutely. And again, I think that bubbles down to at the end of the day, if you're in the market, it's in your best interest for it to keep going up.
Yep.
That's the reality. And I say that I'm in the market. It's in my interest, but I think we need a
Yeah.
hard reset. And this is one of those things that's just going to worsen the problem instead of actually tackling it.
Completely agree.
And I'm glad that we're all in agreement on that because I was really keen to talk about it on the podcast because I've read this and I've just got this is not going to help anyone. Like I can't think of a
I'm
single
Like,
person.
all they're doing is just making it worse. Like
It is.
there hasn't been one thing that you go, that maybe could have worked.
I know.
And
Yeah,
now it
nothing.
just seemed to be compounding that shit on shit.
But it's 20 years of things. I get told off on LinkedIn for being political. I'm not. I'm not judging any particular
Yeah.
government. I'm judging 20 years of government failure.
Exactly.
The three tiers of government.
Yeah.
Exactly.
And
I think I can't stress enough. I hate both sides of the government.
Yeah.
Like I really do. Like let's make that really clear. It's
I
we're
have no allegiance to any of them anymore.
no, we're judging the policy failures that
Yeah,
are clearly causing these problems in the
Hurting
subcontinent.
I've been
country.
suggesting on LinkedIn with some of my posts to say, look, why don't we have a non-political body in charge of housing?
Mm.
The problem is the MPs have a vested interest.
This and
As you
exactly-
say, they want the price
exactly
to
the
go up.
problem.
Why don't we have a bunch of people who have to go and disclose what their holdings are or whatever when
when they're going for election, they why don't we bring in a bit more transparency? Why don't we bring in rules about? I mean, look, it's a very hard situation. You can't really have a cap on. You can't say to somebody you can't run for government if you have more than 3 properties in your portfolio.
depends what your position is.
Depends
do you
what
know
your
what I
view
mean?
is. I don't think you can do that.
I think your portfolio should depend on you not benefiting it from at the time or afterwards.
Exactly.
That's
right.
not right.
Correct.
But
But
it's
at the
almost
very
insider
least,
trading at that
transparency and
point, isn't it?
disclosure. I think
Yeah.
it needs to be. I mean, people would argue that it's public access information. It is, but not to most people. Most people aren't going to sit there voting for an MP going, how many properties do they own in their portfolio?
Exactly.
You know, I
Well, it
think it's
wouldn't hurt
something
if you
that
got
needs
the
to be-
people in the housing department owning lots of property or whatever.
Yeah.
Like, I don't know. I just thought if we had a non-independent, a non-political housing entity
I
that was
think
in
it's a
charge of
great
housing,
idea. I think
and there was
it's a great
no
idea.
conflict of interest. Because the other problem, don't forget, is the MPs. I'm not judging any side of politics. All of them, their biggest donors are developers and builders.
Yeah.
Correct.
So there's all your
Lobbying,
conflict of
Political
interest.
money in
Political lobbying has been one of the biggest
Yeah.
issues in the Western
And
world.
we all see it.
for
We're working
decades.
industry.
It's absolutely.
Who's
And-
spending all the money on advertising all the time?
Exactly.
right.
How many property developers could you probably name easily?
Yeah.
And how many could you name that are probably have gone through the cycles, motions? Something goes wrong, they shut down, they just reopen under a different name.
That's right.
Fine. And I know they've tried to.
That old
Again,
chestnut.
they've introduced a policy to try to tackle that now too. The whole director ID number now that everyone has to have. If you're self-employed, you have an individual reference number. So if you do
If you
run
got
a
an ACN,
company,
Got an ABN,
yeah,
you're right.
if you run a company into the ground, you're
That's
supposed to then not be able to open
Yeah.
up another one in the near future without being flagged. Even
Yeah.
that, does it work? I don't know. Not that I've really been able to see, but it's just same
Yeah.
thing with this now. Who is this actually going to benefit this reduction?
It's frustrating for us
Together.
because we work in the industry,
Yeah.
we see the problems, and we keep seeing these policies coming in that are not helping.
No, and it's really hard because in our lines of work, me and Ben in particular, we're incentivized commission-based salespeople. If prices are high, the lending's high. I get paid more. It's in my better interest for the market to
True,
keep going
true.
crazy.
Yeah,
So I say this with pure objectivity because it's actually against my
Yeah,
better
yeah,
interest for the market to crash. But we need a reset. Something has to give here.
True.
It can't keep
Yeah,
going on
yeah.
like this because I'm in my 20s. I'd love to be buying multiple properties and have a bit of a portfolio, build some passive income, but I just can't.
Yeah,
It's unaffordable.
it is. And it doesn't make sense because the cash flow is negative.
Exactly.
can't afford
It shouldn't make
So
it.
once you take the
it's-
capital gains benefit away, what's the
What's
point?
the point in having property?
Exactly.
Yeah.
I'm going to sell. I'm going to pay so much more tax when I sell it. Why would I
Yeah.
want to invest in property?
And
Yeah,
then they'll
It's-
tweak negative gearing and
Yeah.
such as well. It's just going to be what's the point?
Yeah.
Negative gearing, I
Yeah.
don't think they can touch. That's one thing I've said on this podcast before. That doing anything to negative gearing is like political
Never say
suicide.
never.
I don't know.
Someone will find
Anything's
a way.
possible.
It's political suicide.
But the thing is, I think the stat is something like 80% of property investors have less than 3 properties in
Yeah.
total.
Yeah.
Like the vast majority of property investors don't have many properties.
they're usually mum and dad investors.
Yeah,
Let's be real.
right.
Like,
And they're not all like $10 million houses in Sydney.
No.
You know?
They
People
own-
forget that.
Own,
They think that-
own a 2-bedroom unit in
Yeah.
a
Yeah, exactly.
$500,000 average
Yep.
suburb. It's not.
you know what we should do in terms of taxation and whatnot? If we want to reform some part of it to do with property, why don't we talk about foreign investment into our market? Why don't we tackle that? Why don't we put a stop or at least a limit onto how much of that's coming in so that it's not pumping up prices and
I
causing
think there has
supply
been stopped a fair
shortages.
bit
Mm.
compared to 10 years
Absolutely,
ago.
but let's do even more as
Yeah.
opposed to punishing local investors. You know,
Oh,
I
yeah,
think
fair enough.
they're just tackling it from the wrong angles. I look at this and I just think, who is this helping? Like,
Yeah.
I don't understand what the point of this is. Anyway,
Defies logic.
Exactly right.
to me it does.
I think we did well there.
I'm pretty much all out of questions, really.
Yeah,
I've got nothing
excellent.
else to really throw your way, unless Benny's got anything cooking in that beautiful
I
brain of
enjoyed
his.
that. That was good. That was actually very informative. Like we do a few here and there, and we know what we're talking about before. I came into this. I scanned over the questions that Kristian had put up, but I was actually quite interested to rack
Yeah.
your brain on it as well. It was good.
Well, I think it's good because you guys work for yourself effectively.
Yeah.
You're on commission. And, it's hard running your own business
Yeah.
effectively. Do you know what I mean? You don't get paid if you don't work and you don't get results.
Absolutely.
And I enjoy working with other property professionals, regardless of what they are, surveyors or town planners, whatever, because I know what I know, but I don't know what you know.
Yeah,
I don't know what you know.
absolutely.
And we all learn from each other
100%.
Absolutely.
because we are all part of this property wheel that when a property wants to get built, sold, whatever, we all need to do it.
We're
It's
in
got to
there.
have a valuer, an agent, a
Mhm.
broker, a
I've
surveyor.
said that on this show so many
Yeah.
times. Is at the end of the day, we should theoretically all be on the same team, right?
We are, yeah. Like,
At the end of the
well, we
day,
should be.
yeah. This is the problem. A lot of people in the transaction fail to see that.
I
which
think the
pisses me
people
off.
who are
Like,
good at their
it's-
job are not defensive mindset.
Yes.
They're just sharing mindset. Like I am at the point now with my job where I share jobs with other valuers because I go, look, that's your thing.
Yeah.
They give me this
Well,
one's
then
my
mine.
thing.
Yeah.
But Daniel and I go for a walk and we go and talk about conveyancing and valuation.
Yeah.
You learn from each other because we're all
Absolutely.
property professionals.
But it's important. As much as my job is not valuer specific, I've got nothing to do with valuations, but
It's good to know about
it plays such a key role in
Yeah.
what I do.
That's
that
right.
I think it makes me a better professional. It makes me better at what I do. It makes
Yep.
me a more rounded, mortgage broker if I can communicate effectively to my clients how these valuations work and what the impacts of certain things are and how it operates. And, to get that knowledge, I need to speak to people like you.
And Ben
and
can't
vice
sell a
versa.
property if the buyers don't have any finance.
Exactly. Right.
Exactly. At
all
the
part
end
of the
day,
process.
I couldn't agree with you more. So
Yeah.
it's been great to have
Thanks,
you on.
guys. It was awesome.
Thank you very much.
I would absolutely love to. I think that's my phone ringing in the background. It's linked to the laptop. That's what. Anyway, I think we're all wrapped up there. We will say, obviously, we'll make sure we link all of Niall's socials,
sure.
his LinkedIn profile, his website, everything.
Cool.
You
Thank
have all
guys.
the links there. So if you do need an independent valuation, whether it is for capital gains or stamp duty, or whether you're going to court and you're trying to screw the ex-wife out of the house, whatever it might be, whatever you need, Niall's there.
Look, I'm happy to answer questions. Honestly, I want to help people at the end of the day. And if I can't do the job, I'll say so. But honestly, give me a call. Happy to answer questions. Because the worst thing is most people don't know a valuer.
Yeah.
Most people don't know a surveyor. Most people don't know these particular professions, right?
Absolutely.
So just ask the question because if I don't know the answer, I'll point you to somebody who does.
Absolutely.
Respect
So-
that.
One
Thanks,
final,
guys.
No
Perfect.
worries. One final thing from me too. This is probably not so much relevant to Niall, more so to our podcast. This is probably going to be the last episode as you guys know it as we are. We got some really big changes coming up. So
Oh, big chat.
without giving away too much because Madison would kill me, this is effectively the end of the way you see things. Currently, there's going to be some pretty big changes moving forward. So stay tuned. Keep an eye on the socials. It's coming up very, very shortly. I know we've been talking about it for a little bit now, but we're pretty much there now. We're ready to
Love
move.
it. On that note, ciao.
Ciao.
Thanks, guys.
Everything presented in this podcast is for information and entertainment purposes only, and all advice is to be considered general in nature. It does not take into account your personal circumstances and financial objectives. Please consider if this advice is right for you and look to consult a financial professional.